Friends, now we are going to start the chapter deductions under chapter 6A, or else it is also called as deduction under section 80C to 80U. Very important chapter for exam point of view and most important for the practice. Out of this chapter we can expect minimum 4 marks question. This is pakka A category chapter. Compulsory we can expect 1 or 2 questions out of this chapter. Okay, chalo. The chapter is deductions under section 80C to 80U, or else deduction under chapter 6A. Friends, I will treat you as a layman and I will start from that scratch itself. Okay, chalo. Friends, whenever any client comes to your office, first we need to ask him what is the previous year or what is the assessment year. We need to ask. Question number 1. After that, second question we should ask them what is the residential status of that fellow for this assessment year or for this previous year. We need to ask. Okay, residential status. Residential status we need to ask for the previous year, not for the assessment year, previous year. Question number 3, I need to ask him what are the incomes under the head salary or under the head house property or under the head PCBP or else under the head capital gains or else under the head other sources. Like this, all 5 heads income I need to calculate. After that, friends, it is time for clubbing of income. So in case of indirect transfers or certain transfers, at that time the income arising because of the transfer in the hands of the transferee will be clubbed in the hands of the transferor. That means clubbing of income provisions we need to apply. Okay, next point, we need to adjust, we need to deduct any set off of losses, set off and carry forward of losses, we need to deduct. Okay, chalo. So set off and carry forward of losses we need to deduct. After deducting the same, we will get gross total income. Out of that gross total income, I need to give the deductions under section 80C to 80U. Okay, chalo. So after deducting these deductions, I will get total income, or else I will get net income, or else I will get taxable income. That's all ma. This is the way of computation of total income. On the total income, I need to calculate the tax. So this is the pattern, this is the sequence. First one, assessment year, previous year and residential status. Next one, all 5 heads of income. Next point is clubbing of income. Next point is set off and carry forward of losses. Next point is gross total income. Next point is deductions. Next point is total income. Take it for granted, deductions under chapter 6A or else deduction under section 80C to 80U shall be reduced after considering clubbing provisions and after considering set off and carry forward of losses. Okay, chalo. So point number 1, we need to give the deductions out of gross total income, that too after adjusting losses and after considering clubbing of income provisions. Okay, this is the point number 1. So see the first point, deductions will be allowed after adjusting clubbing provisions as well as set off and carry forward of losses. So first clubbing, next set off, after next only deductions. Okay, this is the point number 1. I would like to highlight here after adjusting clubbing provisions and after adjusting set off and carry forward of losses. Okay, point number 1. Point number 2, how much deduction I can claim. For example, my gross total income 10 lakh. Then worst case you can take deduction also 10 lakh. Worst case possibility maybe. You cannot take 12 lakh. I repeat, if your gross total income is 10 lakh, 100% you cannot take 12 lakh deduction and you cannot take 2 lakh losses. So moral of the story, because of deductions, no SSC will result into loss. Okay, because of deductions, no SSE will get the losses. See the word, SSE does not have any losses as a result of deduction under section 80C to 80U. So because of these deductions, you will never ever get the losses. That means worst case, your deductions amount does not exceed gross total income. I repeat, your deductions amount does not exceed gross total income. If your gross total income 10 lakh, worst case you may get the deduction 8 lakh or 7 lakh or 6 lakh or 9 lakh, or else least possibility 10 lakhs. No one will get deduction of 11 lakh when they have gross total income of 10 lakh. That means simply I would like to conclude this point. No SSE will get the losses because of deductions. Okay, chalo. Next. Sir, double deductions allowed. Sir, single deduction itself government is not allowing some cases. How double deduction? So no double deduction will be allowed with respect to same expenditure incurred. Same expenditure point of view is concerned, 2 times deductions not allowed. Maybe 1 time it is allowed. Suppose if any other possibility of deduction, 2nd time not at all allowed. Simply no double deductions with respect to same expenditure is concerned. Next point, how much is the maximum deduction? Answer, for every provision, for every section, there is a specified limit. For example, in case of 80C, the maximum deduction is 1,50,000. In case of 80D, maybe the maximum deduction is 50,000, for example. So moral of the story, the quantum of deduction does not exceed permissible limit specified in the respective deduction. I repeat, respective deduction. That means every provision consisting of permissible limit, only this much. You cannot claim the deduction over and above that particular specified limit. See the word, the quantum of deduction does not exceed permissible limit specified in the respective deduction. So in 80 capital C, maximum 1,50,000. That's all. You can also claim 1,50,000 worst case. You cannot claim more than 1,50,000. So the quantum of deduction does not exceed the specified limit in the particular provision. Okay, chalo. Next point, how much is the deduction? As I told you, deductions will be allowed out of the gross total income. That too, maximum deduction does not exceed the amount of gross total income, and that too, the deduction amount does not exceed permissible limit specified in the respective provision. So here simply gross total income minus deduction is nothing but total income. Okay, next. Friends, here the aggregate amount of deduction does not exceed gross total income. Okay, already I covered. But friends, my gross total income 100 lakh. Can I take 100 lakh deduction? Answer, maybe yes, may not be. Maybe, may not be. Why? Certain incomes are not eligible for deduction. I repeat, certain incomes are not eligible for deductions. What is that? Number 1, long-term capital gain, no deductions. Long-term capital gain covered under section 112 or else covered under section 112A, no deductions. Reason as simple as that. That is taxable at special tax rates. That is taxable at lower tax rate. Already I have given one benefit there. How I can give another benefit? So your long-term capital gain is not eligible for deduction. For example, my long-term capital gain, for example, 2 lakh, my other income, let us say 3 lakhs, total gross total income 5 lakh. Worst case, I can take deduction, that is only 3 lakh, because this long-term capital gain is not eligible for deduction. That's all. Not only long-term capital gain, some others also. Short-term capital gain covered under section 111A. Sorry sir, short term capital gain covered under section 1(1)(a) triple 1(a). That is also taxable at special rate. No way, no deduction. Next one, casual income. Babu, sin money. S-I-N, sin money. That is casual income. Winning from lotteries, winning from betting, winning from horse races, winning from TV shows, etc. Which is covered under section 115BB. Memory code. Bad boys. Some bad boys will do gambling, betting, etc. Babu, bad boys, whatever the income you have, casual income, no deductions. Casual income is not eligible for any deductions because that is straight away taxable at the rate of 30%. No deductions. Next point. Non-resident, NRIs, non-resident as well as NRIs. Sir, as far as non-residents are concerned, non-resident or else non-resident Indians are concerned, the special provisions are applicable. Whenever special provisions are applicable, then where is the question of deductions? Already I have given one benefit there by giving a different tax rate, lower tax rate. How you can ask me again deduction? Therefore, generally deductions are not applicable for non-resident as well as non-resident individuals. In some cases allowed, some cases not allowed. What are the cases we can cover in detail in the respective chapter, but time being some cases not allowed. And the last one, SSE who opted, that is special tax regime. What is the special tax regime? Ma'am, in the year 2020, Finance Act 2020, ma'am, Nirmala Sitharaman ma'am, that is a Union Finance Minister, she introduced one concept called as special tax regime. Those SSE who opted the special tax regime, they are not at all eligible for deductions. In detail I am going to cover in that chapter, but time being I would like to tell you, who opted special tax regimes are not eligible for claiming of deduction. See the word, no deductions will be allowed with respect to long-term capital gain covered under section 112 or 112A. Short-term capital gain covered under section 111A, and casual income and taxation of non-resident or non-resident Indians, or else SSE who opted special tax regime under section 115BAA, 115BAB, 115BAC, 115BAD, like this, like this. Okay, chalo, that's all ma. This is the small introduction about the deductions. No doubt ma, because of deductions your total income will come down. Because of deductions your tax liability will come down. Therefore, these are SSE friendly topics. Whenever these are SSE friendly topics, compulsory SSE want to know about these issues from the chartered accountants only, or cost accountants, or company secretaries. So therefore, we should learn this topic. Okay, we should get expertise over this topic. We should cover each and every point. Chalo, next. AOP or BY, Association of Persons and Body of Individuals. You know what happened? These fellows claimed deductions. I repeat, AOP, BY are eligible for deduction, so they have claimed the deduction. Now their members, Mr. X, Mr. Y, Mr. Z, also want to claim same deduction with respect to same expenditure or same income. Answer, no way, no way. If your AOP or BY claimed the deduction with respect to same expenditure, members cannot claim the deduction. I told you now there is no question of double deduction. Whenever your AOP, BY taken the deduction, how after all SSE can take the same deduction? No way. See the point. If deduction is allowed with respect to total income of AOP, BY, then no deduction will be allowed with respect to computation of total income of members of AOP, BY. Okay, chalo. If deduction is allowed with respect to total income of AOP or BOI, then no deduction will be allowed in the hands of the members with respect to same expenditure or same income. Okay, now friends, yeah. Next, how many types of deductions? There are three types. One is expenditure based, one is income based, one is special nature. Special, what is this? Expenditure based, you have to pay out of your pocket. For that, sections are 80C to 80GGC. Income based, section 80IA to 80TTB. Special, physically handicapped or mentally retarded or deaf or dumb, etc. 80 capital U. Okay, chalo. Three category. Babu, I am not telling three sections. I am telling three category, three set of sections. Oh, SSE can claim deductions if you spend the money. SSE can claim the deduction if you earn the money. SSE can claim the deduction if he has any disability. First one, expenditure based deductions. The sections are as follows: 80C to 80GGC, whereas income based 80IA to 80TTB, special nature deduction 80 capital U. Expenditure based, the sections are as follows. None of the sections are 80C, CCC, CCD subsection 1, CCD subsection 1B, CCD subsection 2, 80 capital D, DD, next one DDB, next one 80 capital E, 80 capital EE, 80 capital EEA, 80 capital EEB, 80 capital G, GG, GGA, GGB, GGC. These are the sections related to expenditure. Income, 80 IA, IB, IC, ID, IE, IAB, IBaboy. These sections are there. Okay, there are many sections. After that P, PA, LA. Next one JJA, JJAA. Next one is QQB, RRB, TTA, TTB. These are the different sections. Whereas in the last special nature 80U. That's all. These are the sections. Nana section names were completed. Discussion not yet started. We need to discuss many miles to go. But no doubt, you have to spend some time for this. And you have to spend some GB also in your brain. You should be able to memorize the sections. Honestly speaking, you have to by heart the section name also. I will not recommend the sections to by heart the section names. But these sections, no doubt, you have to by heart for sure. But first try to understand the range. 80C to 80GGC come under expenditure based. 80 IA to 80 TTB income based. 80 capital U, that is physically handicapped, etc. Okay. So friends, first I would like to tell the topic, that is expenditure based deductions. Once that is completed, we will go for income based deductions. Once it is completed, chapter completes. Okay, chalo. So I request you everyone, very important chapter, don't neglect this chapter. Out of this chapter, easily you will get 4 marks. And at the time of articles or at the time of what you call practice, these sections are compulsory. And if you want to file your income tax return also, it is compulsory. Once upon a time, while doing audit in one company, I cannot say that company name in before camera. While doing that audit, that person accountant is asking me, very senior accountant, Chennai wala, sir, I want to save money, I want to save tax, what to do? Then I said, sir, under ATC so many investment modes you can do. Then immediately he said, no, 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 I don't want to pay anything. I don't want to pay anything, but I want to save. Then I said, sir, then bogus deductions you can claim. Fake papers you can submit and you can claim. That is not recommended. He also said, he is also not interested in that. Then still he asked me, I don't want to invest anything, and that too I don't want to take any fake deductions. What I need to do? Then I said casually like this, sir, do one thing, jump from the building. So anything may be broken, right? Immediately you can take deduction under 80U. That is only the way you can take the deduction without doing anything. Okay, without doing something. Okay, chalo. So moral of the story, 80C to 80U, there are so many deductions. Out of that, some deductions are expenditure based, some deductions are income based, some deductions are special nature. But I would like to tell you one thing for sure. Under these deductions, you can claim these quantum of deduction only out of gross total income, that too after adjusting set off and carry forward of losses as well as clubbing provisions. So the last resort is only nothing but deductions as far as income part is concerned. And no doubt, certain incomes are not eligible for deductions. Long-term capital gain, but only one short-term capital gain. Other short-term capital gains will be allowed, but only short-term capital gain covered under section 1(1)(1)(a) is not allowed. Next, casual income not allowed. Next one, non-resident Indian, in some cases not allowed. Next one, special tax regime, who opted that special tax provisions not allowed. And casual income, I told you, anyhow not allowed. Okay, chalo. These are the points. No double deductions, one thing for sure. And income based means you have to do some businesses and you have to earn money. Expenditure means you have to spend some amount. And the last one is special nature, means physically handicapped or something. So these are the deductions with respect to income based, expenditure based as well as special nature. Okay, chalo.